Question 1. Which of the following statements best describes the principle of indemnity in property insurance? A. The principle of indemnity allows an insured to recover more than the value of the loss to help with expenses. B. The principle of indemnity requires that an insured be reimbursed only up to the actual value of the loss with no profit involved. C. The principle of indemnity ensures that an insured will receive the same amount as they paid in premiums, regardless of the loss. D. The principle of indemnity allows for payment based on the original value of the property before depreciation. Answer. B. The principle of indemnity requires that an insured be reimbursed only up to the actual value of the loss, with no profit involved. Explanation. The principle of indemnity is a core concept in property insurance, ensuring that an insured person is compensated only to the extent of their loss. The goal is to restore the insured to the same financial position they were in before the loss occurred, without providing a profit. This prevents moral hazard, where individuals may be incentivized to cause a loss in order to profit from insurance. Options C and D are incorrect, as they either allow for excess compensation, do not account for the loss amount, or use depreciated value rather than actual value for reimbursement. Question 2. What is the purpose of collision coverage in an auto insurance policy? A. To cover damage to the insured vehicle when it is involved in a collision with another vehicle or object. B. To cover damages caused by natural disasters such as floods or earthquakes. C. To cover medical expenses for the driver and passengers in the insured vehicle. D. To cover the legal costs associated with a lawsuit after an accident. Answer. A. To cover damage to the insured vehicle when it is involved in a collision with another vehicle or object. Explanation. Collision coverage is a type of auto insurance that helps pay for repairs or replacement of the insured vehicle after it collides with another vehicle or object, regardless of who is at fault. Option B refers to comprehensive coverage, which handles damage from natural disasters. Option C refers to medical payments or personal injury protection, and option D refers to liability insurance, which covers legal costs. Question 3. Which of the following actions would be considered an unfair trade practice under Virginia's insurance laws? A. An insurer providing a policyholder with a prompt and fair settlement after a loss. B. An agent offering a discount on premiums in exchange for referring new clients. C. An insurance company providing clear and accurate information to clients about coverage options. D. A producer making a misrepresentation about a policy's terms to induce a client to purchase it. Answer. D. A producer making a misrepresentation about a policy's terms to induce a client to purchase it. Explanation. Under Virginia's insurance laws, unfair trade practices include actions that deceive or mislead consumers. Misrepresentation, which involves falsely representing the terms, conditions, or benefits of an insurance policy to induce a consumer to purchase it, is considered a major violation of the law. Option D describes such a practice, which is explicitly prohibited by Virginia's consumer protection laws and the National Association of Insurance Commissioners (NAIC) model regulations. On the other hand, options A, B, and C are not violations. Providing prompt settlements, offering discounts if not tied to misleading incentives, and giving clear information to clients are all acceptable practices in insurance. Question 4. Which of the following is a key characteristic of the occurrence form of general liability insurance? A. Coverage is only provided for claims made during the policy period, regardless of when the event occurred. B. Coverage is provided for events that occur during the policy period, even if the claim is made after the policy expires. C. The insurer will only cover claims made during the policy period, even if the event occurred within the previous year. D. The policy covers claims that occurred outside the policy period if the event is related to a prior claim. Answer. B. Coverage is provided for events that occurred during the policy period, even if the claim is made after the policy expires. Explanation. The occurrence form of liability insurance is structured to cover events that happen during the policy period, even if the claim is made after the policy expires. This is different from the claims made form, which only covers claims made during the policy period. The occurrence form provides more extended coverage, ensuring that claims arising from incidents that occurred during the policy period are still covered regardless of when the claim is made. Question 5. Which of the following is not a typical feature of a workers' compensation policy in Virginia? A. It provides medical benefits for employees injured on the job. B. It covers lost wages for employees who are temporarily disabled due to an injury. C. It provides liability coverage for employers in the event of a lawsuit from an employee. D. It covers permanent disability benefits for employees who cannot return to work after an injury. Answer: C. It provides liability coverage for employers in the event of a lawsuit from an employee. Explanation: workers' compensation insurance is designed to provide medical benefits, wage replacement, and disability benefits to employees who are injured while performing job-related duties. However, it does not cover employer liability for lawsuits filed by employees. In Virginia, workers' compensation is generally an exclusive remedy, meaning that employees cannot sue their employer for workplace injuries, with a few exceptions. Options A, B, and D are typical features of workers' compensation coverage. Question 6. Scenario: Mrs. Turner has a business in Virginia and holds a business owner's policy BOP for a retail shop. During a fire at her shop, she suffers damages to both the building and the inventory inside. Her BOP includes coverage for both property and liability, but it excludes fire damage to personal property in transit. Based on the exclusions, what part of her claim is likely to be covered under the policy? A. Only the damage to the building will be covered. B. Both the damage to the building and the inventory inside will be covered. C. Only the damage to the inventory will be covered. D. Neither the damage to the building nor the inventory will be covered. Answer A. Only the damage to the building will be covered. Explanation: a business owner's policy BOP typically covers both property and liability, but it often contains specific exclusions such as damages to property in transit. In Mrs. Turner's case, the policy excludes fire damage to personal property in transit, so the inventory, which is likely considered personal property in transit, would not be covered. However, the building itself as part of the insured property would typically be covered under the policy, as it is not part of the excluded category. Therefore, option A is the correct answer. Question 7. Which of the following would be a violation of Virginia's insurance code regarding unfair discrimination in insurance practices? A. An insurer charging a high premium to a high-risk driver. B. An insurer offering the same rates to all applicants regardless of their risk. C. An insurer charging higher rates to women for auto insurance based on their gender. D. An insurer providing discounts to policyholders with good driving records. Answer: C. An insurer charging higher rates to women for auto insurance based on their gender. Explanation: under Virginia's insurance code, unfair discrimination in insurance practices includes charging different premiums or providing different coverage based on prohibited factors such as gender, race, or nationality. Charging higher rates to women for auto insurance solely based on gender constitutes illegal discrimination. The law prohibits insurers from using certain characteristics like gender as the sole basis for determining insurance premiums. Options A, B, and D are not violations, as they involve risk-based pricing or offering discounts based on legitimate underwriting factors. Question 8. Which of the following is a defining characteristic of term life insurance? A. It provides permanent coverage for the insured's entire life. B. It offers the flexibility to adjust the premium and death benefit amount. C. It covers the insured for a specific period, typically 10, 20, or 30 years. D. It accumulates cash value over time, which can be borrowed against. Answer: C. It covers the insured for a specific period, typically 10, 20, or 30 years. Explanation: term life insurance is designed to provide coverage for a specific period such as 10, 20, or 30 years, and it does not build cash value like whole or universal life insurance. It is typically less expensive than permanent life insurance because it only provides a death benefit if the insured passes away during the term of the policy. Option A describes permanent life insurance, which is not term life insurance. Option B and D describe features of permanent life insurance policies. Question 9. Which of the following statements regarding health maintenance organizations: HMOS is true? A. HMO plans require members to see any doctor of their choosing, regardless of network affiliation. B. HMOS typically have higher premiums but offer greater flexibility in selecting healthcare providers. C. HMOS usually require members to select a primary care physician (PCP) who coordinates all healthcare services. D. HMO plans do not require referrals to see specialists or obtain additional care. Answer: C. HMOS usually require members to select a primary care physician (PCP) who coordinates all healthcare services. Explanation: health maintenance organizations (HMOS) require their members to choose a primary care physician (PCP) who acts as the gatekeeper to coordinate all healthcare services, including referrals to specialists. This model is designed to control healthcare costs by limiting the use of out-of-network services and ensuring that care is managed within a network. Option A is incorrect because HMOS restrict members to a network of providers and members need referrals from their PCP to see a specialist. Option B is incorrect because HMOs typically have lower premiums but also less flexibility in choosing providers. Option D is incorrect because HMOs require referrals for most specialized care. Question 10. Which of the following is true about the use of policy riders in life insurance? A. Riders are added to increase the base policy's premiums without altering the coverage. B. Riders are automatically included in all life insurance policies. C. Riders are added to modify the coverage of the base policy, offering additional benefits or options. D. Riders can only be used in permanent life insurance policies, not term life insurance. Answer. C. Riders are added to modify the coverage of the base policy, offering additional benefits or options. Explanation. Policy riders are additional provisions that can be added to a life insurance policy to modify the coverage or provide additional benefits, such as accidental death coverage or waiver of premium in case of disability. Riders allow the insured to tailor the policy to their specific needs. Option A is incorrect because riders are designed to modify coverage, not simply increase premiums. Option B is incorrect because riders are optional and must be selected by the policyholder. Option D is incorrect because riders can be added to both permanent and term life insurance policies depending on the insurer and policy type. Question 11. Which of the following best describes the role of an insurance producer under Virginia law? A. An insurance producer is responsible for underwriting insurance policies. B. An insurance producer is authorized to create insurance contracts on behalf of insurers. C. An insurance producer is responsible for marketing, selling, and servicing insurance policies for clients. D. An insurance producer is a claims adjuster who evaluates the value of insured property. Answer. C. An insurance producer is responsible for marketing, selling, and servicing insurance policies for clients. Explanation. Under Virginia law, an insurance producer, also known as an agent or broker, is responsible for marketing, selling, and servicing insurance policies for clients. Producers act as intermediaries between insurers and consumers, helping clients select the appropriate coverage and assisting with policy renewals and claims processing. Option A is incorrect because underwriting is typically handled by insurance companies, not producers. Option B is incorrect because producers do not create contracts. They facilitate the sale and service of insurance. Option D describes the role of a claims adjuster, not an insurance producer. Question 12. What is the primary purpose of a coinsurance clause in property insurance? A. To provide coverage for property losses exceeding the policy limit. B. To require the policyholder to maintain a certain level of coverage relative to the value of the property. C. To reduce the premium cost by limiting the insurer's payout for large claims. D. To exclude certain types of losses from coverage under the policy. Answer. B. To require the policyholder to maintain a certain level of coverage relative to the value of the property. Explanation. The coinsurance clause in property insurance requires the policyholder to insure their property for a specified percentage of its value, usually 80%, 90%, or 100%. If the property is underinsured, the policyholder will only receive a partial payout in the event of a claim based on the proportion of insurance coverage relative to the value of the property. Option A is incorrect because coinsurance does not increase the policy limit. Option C is incorrect because coinsurance does not limit the payout but determines the proportionate payout if the property is underinsured. Option D is incorrect because coinsurance does not exclude losses but rather adjusts the payout based on the insured amount. Question 13. Which of the following is the best example of a broad peril in a homeowner's insurance policy? A. Fire and lightning. B. Theft and vandalism. C. Flood and earthquake. D. Windstorm and hail. Answer A. Fire and lightning. Explanation. A broad peril is one that is covered by most homeowners' insurance policies as long as it is not excluded by the policy. Fire and lightning are generally considered broad perils, meaning they are typically included in coverage without needing special endorsement. Option B represents common perils but may be subject to limitations depending on the policy. Option C represents perils usually excluded or require separate coverage. G. Flood insurance. Option D may be covered in certain areas but could require additional coverage or endorsements depending on the location and policy terms. Question 14. Which of the following is not a duty of an insured after a loss under a typical property insurance policy? A. Immediately notify the insurance company of the loss. B. Take reasonable steps to protect the property from further damage. C. File a police report for theft or vandalism within a reasonable time. D. Immediately repair any damages to the property before notifying the insurer. Answer: D. Immediately repair any damages to the property before notifying the insurer. Explanation: under a typical property insurance policy, the insured has certain duties such as notifying the insurance company promptly, taking reasonable steps to prevent further damage, and filing a police report if theft or vandalism occurs. However, the insured should not repair damages before notifying the insurer, as the insurer may want to inspect the damage before repairs are made. Therefore, option D is incorrect. Question 15. Which of the following is typically not covered under a standard personal auto policy? A. Damage caused by an uninsured driver. B. Medical expenses resulting from a collision. C. Damage to the insured's car due to tornado. D. Theft of the insured's vehicle while parked in public lot. Answer: B. Medical expenses resulting from a collision. Explanation: while a standard personal auto policy covers damage to the insured's vehicle and liability for injuries or property damage to others, medical expenses for injuries resulting from a collision are typically covered under separate medical or personal injury protection (PIP) coverage. Option A refers to uninsured motorist coverage, which is typically included in a standard policy. Option C refers to comprehensive coverage, which covers damage from events like a tornado. Option D refers to theft, which is covered by comprehensive coverage under the policy. Question 16. In the context of business insurance, which of the following best describes business interruption insurance? A. It provides coverage for injuries sustained by employees during business operations. B. It compensates the business for lost income due to events like fire or natural disasters that disrupt normal operations. C. It protects the business owner from lawsuits filed by customers for damages. D. It covers the costs of hiring replacement workers during an employee's temporary leave. Answer: B. It compensates the business for lost income due to events like fire or natural disasters that disrupt normal operations. Explanation: business interruption insurance is designed to help a business recover lost income and cover fixed expenses if operations are interrupted due to a covered peril such as a fire, natural disaster, or other events that cause business disruption. This insurance helps ensure that the business can continue to meet financial obligations even if it cannot operate. Option A describes workers' compensation insurance. Option C refers to liability insurance, and option D pertains to employee benefits, not business interruption. Question 17. What is the primary difference between a replacement cost and an actual cash value insurance policy? A. Replacement cost covers the original purchase price of the property. B. Actual cash value includes depreciation, while replacement cost does not. C. Replacement cost only covers property that has been paid off. D. Actual cash value is always more expensive than replacement cost. Answer: B. Actual cash value includes depreciation, while replacement cost does not. Explanation: the primary difference between replacement cost and actual cash value is that replacement cost pays for the full cost to replace the damaged property without deducting for depreciation, while actual cash value deducts depreciation, meaning it only reimburses the insured for the value of the property at the time of loss. Option A is incorrect because replacement cost is not based on the original purchase price. Option C is incorrect because both replacement cost and actual cash value apply to property regardless of whether it is paid off. Option D is incorrect because replacement cost is typically more expensive due to the higher reimbursement amount. Question 18. Which of the following is a typical exclusion under a standard homeowners insurance policy? A. Damage caused by vandalism. B. Fire damage to the dwelling. C. Damage caused by flooding. D. Theft of personal property. Answer: C. Damage caused by flooding. Explanation: flood damage is typically excluded from standard homeowners insurance policies, which is why separate flood insurance is often required. Options A, B, and D are generally covered by standard homeowners policies unless other exclusions apply. Homeowners may need to purchase separate flood insurance or a flood endorsement to cover water damage caused by flooding. Question 19. What is the purpose of an umbrella liability policy in insurance? A. To cover expenses that exceed the limits of other insurance policies. B. To provide health coverage in case of an emergency. C. To provide coverage for damages to personal property. D. To replace lost wages if the insured is unable to work. Answer A. To cover expenses that exceed the limits of other insurance policies. Explanation: An umbrella liability policy provides additional liability coverage beyond the limits of standard home, auto, or other insurance policies. It is designed to kick in once the primary policy's coverage limits have been reached, offering an extra layer of protection for serious accidents or claims. Options B, C, and D are not correct, as umbrella policies are specifically for liability coverage, not health, property, or wage protection. Question 20. Which of the following is an example of permanent life insurance? A. Term life insurance. B. Whole life insurance. C. Variable life insurance. D. Both B and C. Answer D. Both B and C. Explanation. Both whole life insurance and variable life insurance are considered permanent life insurance policies. They provide coverage for the insured's entire life and typically accumulate cash value over time. Term life insurance, on the other hand, only provides coverage for a specified period and does not accumulate cash value. Therefore, option D is the correct answer. Question 21. Under Virginia's insurance laws, which of the following activities is considered a violation of the Unfair Claims Settlement Practices Act? A. Promptly denying claims that are clearly fraudulent. B. Investigating and settling claims promptly and fairly. C. Failing to acknowledge claims within a reasonable period. D. Offering a higher settlement than the policy limits. Answer C. Failing to acknowledge claims within a reasonable period. Explanation. The Unfair Claims Settlement Practices Act requires insurance companies to acknowledge and respond to claims promptly within a reasonable time frame. Failing to do so is a violation of the Act. Option A is incorrect because denying fraudulent claims promptly is acceptable. Option B describes the proper conduct in claims handling. Option D refers to offering a higher settlement than the policy limit, which may not be standard practice but is not inherently a violation of the Act. Question 22. Which of the following types of insurance would provide coverage for injuries sustained by a third party while visiting your property? A. Homeowners insurance. B. Auto insurance. C. Life insurance. D. Health insurance. Answer A. Homeowners insurance. Explanation. Homeowners insurance generally includes liability coverage that protects the policyholder if a third party is injured on their property. This coverage can help with medical expenses and legal fees if the injured party sues. Auto insurance covers accidents involving vehicles, life insurance covers death, and health insurance provides coverage for medical expenses but not for third-party injuries on your property. Question 23. Which of the following is the primary purpose of a deductible in an insurance policy? A. To reduce the premium cost of the insurance. B. To ensure the insured pays a portion of the loss before the insurer pays. C. To set a maximum limit on the insurer's coverage. D. To determine the eligibility for a claim under the policy. Answer B. To ensure the insured pays a portion of the loss before the insurer pays. Explanation. The deductible is the amount the insured must pay out of pocket before the insurance policy kicks in to cover the rest of the loss. This reduces the insurer's risk and helps to lower the cost of the policy for the insured. Option A is incorrect because the deductible doesn't directly reduce the premium, though a higher deductible may lead to lower premiums. Option C is incorrect because the deductible doesn't limit the insurer's coverage. It only affects how much the insured has to pay before the insurer starts paying. Option D is incorrect because eligibility for claim isn't determined by the deductible. Question 24. Which of the following is typically covered under a standard flood insurance policy? A. Flood damage to personal property. B. Damage caused by a leaky roof. C. Water backup from a sewer system. D. Damage caused by an earthquake. Answer A. Flood damage to personal property. Explanation. A standard flood insurance policy covers damage caused by rising water or flooding, including damage to personal property and the building itself. Options B, C, and D are typically excluded from flood insurance policies and may require separate coverage, such as sewer backup insurance or earthquake insurance. Question 25. What is the purpose of liability insurance in a commercial insurance policy? A. To protect against property damage caused by the business's operations. B. To provide coverage for business interruption due to disasters. C. To protect against legal claims for injury or damage caused by the business. D. To provide coverage for employee injuries on the job. Answer C. To protect against legal claims for injury or damage caused by the business. Explanation. Liability insurance in A commercial policy protects a business from legal claims for injury, property damage, or negligence caused by the business's operations, products, or employees. Option A refers to property insurance, option B refers to business interruption insurance, and option D refers to workers' compensation insurance. Question 26. Which of the following would most likely be considered a non-renewal under an insurance policy? A. The insurer decides to increase the policyholder's premium at renewal. B. The insurer chooses to cancel the policy before the renewal date. C. The insurer offers policy with modified terms but not at renewal. D. The insurer decides not to offer renewal at the end of the policy term. Answer D. The insurer decides not to offer renewal at the end of the policy term. Explanation: non-renewal refers to a situation where an insurer decides not to renew a policy when it expires. This could happen for various reasons, such as the insured's increased risk profile or a change in the insurer's underwriting guidelines. Option A refers to premium increase, which is typically part of the renewal process and not non-renewal. Option B refers to cancellation, not non-renewal. Option C may involve modifications but not the outright refusal to renew. Question 27. Which of the following best describes underwriting in the context of insurance? A. The process of adjusting claims after an incident occurs. B. The process of evaluating risk and determining policy terms for potential clients. C. The process of providing coverage for property that is difficult to insure. D. The process of reimbursing policyholders for losses or damages. Answer: B. The process of evaluating risk and determining policy terms for potential clients. Explanation: underwriting is the process in which an insurance company evaluates the risk of insuring a person or business and determines the terms of the insurance policy, including coverage limits, premiums, and exclusions. Option A describes claims adjustment. Option C refers to insuring high-risk properties, and option D describes claims settlement. Question 28. Which type of insurance provides coverage for workers who are injured while on the job? A. Auto insurance. B. Workers' compensation insurance. C. Homeowners insurance. D. Life insurance. Answer: B. Workers' compensation insurance. Explanation: workers' compensation insurance provides coverage for employees who are injured while working, including medical expenses and lost wages. It is mandatory in most states for employers to carry workers' compensation insurance. Option A covers vehicle accidents, option C covers property-related claims, and option D covers death benefits but not injuries on the job. Question 29. Which of the following is true about renters insurance? A. It covers the structure of the building. B. It provides coverage for personal belongings inside a rented property. C. It covers the landlord's liability in case of an accident. D. It is required by law in most states for renters. Answer: B. It provides coverage for personal belongings inside a rented property. Explanation: renters insurance provides coverage for personal property such as furniture and electronics inside a rented property. It does not cover the building structure, as that is typically the landlord's responsibility under their own property insurance. Renters insurance is not required by law in most states, but landlords may require tenants to carry it. Option C refers to the landlord's liability, which is typically covered by the landlord's own insurance. Question 30. Which of the following is an example of an endorsement in an insurance policy? A. A reduction in the policy's premium. B. A modification to the policy that adds or changes coverage. C. A cancellation of the policy. D. A delay in the policy's renewal date. Answer: B. A modification to the policy that adds or changes coverage. Explanation: an endorsement is a modification to an existing insurance policy that can either add, modify, or exclude coverage. This could include adding coverage for specific perils, increasing policy limits, or changing policy terms. Option A refers to premium adjustments, option C refers to policy cancellation, and option D refers to a delay in renewal, neither of which is an endorsement.